Yeah! Good morning. All right, let me get some coffee. Answer the poll if you could, please. You type it in the chat. One, two, or three, A, B, or C. Should work. Not working though, is it? It's not working. Let me reset it, maybe that'll do it. Maybe that'll do it. Try again. No. Stupid technology. Try that. Boo. Let's try it again. Open the app. It's live. stupid thing isn't working. It's too bad. I thought it'd be a cool feature. Boo. All right, let me get some coffee and we'll get rolling.
Roll it, roll it, roll it, roll it. Roll it, roll it, roll it. All right.
Hey, Mom! Mom! Mom, can you turn down your music? Doing a live stream. YouTube. Please. All right, thanks, Mom. Appreciate it. Can you actually just turn it off? Yeah. All right, cool. All right, now we can get going. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, hey, good morning. Ciao, my name is Wayne. I will be your guide on this thing we call Forex. We had an election. Do you want to talk about it, or is that the past? Is that the past? Whatever. You let me know what you want to talk about, and we will do that. Maybe it's gold, oil, Bitcoin, dollar pairs, yen pairs, Swissy pairs, cross pairs, up pairs, down pairs, fundamentals, technicals, whatever you want. You are the boss. I am a humble servant. Couple of things that you're going to need as a trader. You are going to neat execution. So your choices are quite limited in the Forex world. Your choice is find a broker that trades against you and benefits when you lose, or find a broker that benefits when you win. Which one do you like better? Well, if you like a broker that is focused on providing quality service, and therefore when you win, they win, well, then you need an ECN. Trader's Way is an ECN, so you should check them out. Start there, do your due diligence. It's not the only ECN in the world, but you should start there, perhaps because I recommend it. I've been using their trading platform for, I think, 10 years and 2 months. About. Okay? And then today we're also going to use TRADARS. Yeah, Sky Killer, I've heard all this stuff before, though. You know, that book is already 10 years old. But anyways, fundamentals and technicals. Okay, performance coaching. Even market analysis like headline news and sentiment. Important factor. Okay, so it adds automation and artificial intelligence to your trading strategy. So for example, this is a great one. Or how about JP Morgan? JP Morgan, TRADARS has read in the last 7 days, 69 articles on 24 different websites. Bloomberg, Business Insider, Business Wire, CNBC, FX Empire, Investor Business Daily, Market Watch, Market Beat, New York Post, Reuters, Schwab, Seeking Alpha, Motley Fool, Wall Street Journal, Yahoo Finance, okay? And saw 69 articles about JP Morgan, read the articles, interpreted the articles, and then created an aggregate score to tell you that right now the market is slightly positive on JP Morgan right now. And you can take this out as far as 90 days to see the change. So neutral for a long time, but just as of the 13th of January, got very bullish. Or should I say positive? Not very positive, just positive. But you can see now the historic change. This is this week. This is the last quarter. You see what I mean? It's cool, right? And do this for all the major assets. So that's something that we offer. Now, I have my favorites. I'm a currency trader. So I'm like Aussie dollar, neutral. Euro pound, neutral. Euro dollar, negative. Pound yen, very negative. Pound dollar, negative. Kiwi dollar, neutral. USD CAD, neutral. USD Swiss franc, negative. USD yen, negative. Silver, neutral. Gold, positive. Look at that. I just went through, and that might have been hundreds of news articles on dozens of websites. And instead of reading hundreds of articles, we automated the process. I just read hundreds of articles. On probably dozens of sites. Just like that. Done. Takes me seconds. Oh, you still do it the old way? Don't worry about it, Grandpa. All right, cool. So anyways, this is what we call TRADARS. Now, I typically go through the technicals here and the fundamentals. I think today I actually just want to go to the charts and not look for trading patterns. I want to give you a bigger picture of what's going on. But the markets are not open yet. It's still about an hour away. Okay, Bitcoin well over 104. Okay, yields probably set to come down today. We'll find out. Oil, gold, S&P 500 stuck at 6,000. Okay, could be very interesting. we can use the scatter plot and see in general what's going on, so you can answer questions like risk on or risk off. Well, right now, the way I'm interpreting the scatter plot is, generally speaking, things look all right. Generally speaking, they're trending in a way that we understand. The other way to interpret that, this is like this section here, okay, are the outliers. We would have expected those to be down. Okay? And gold, for example, is down, but we would have expected it to be up. But most things are, okay, right as rain. Copper, platinum getting crushed. Do you think that's because of tariffs? Oil down. Drill, baby, drill. Bitcoin, well, you know what? Bitcoin was 110. Then it dropped to 102. Now it's 104.5. Okay, yeah, it's down, but that isn't quite the expression for the vol that it's had, huh? But most of these things are doing about what you would expect. Bullish and expected, bearish and expected. Good. Today, inflation out of Canada, and then inflation out of New Zealand. Oh, yeah. Cool. I'm not going to do this because I just finished doing this with the team, but we do have an update to the COT, and I spent some time teaching how to interpret this data beyond just something simple like net change. Okay, yeah, that does show flow, but it doesn't always get it. The flows don't necessarily explain the up and down in price. And of course, so I taught people how to do that today. So I showed an example of a positive flow, but it wasn't buyers. So now you can say, oh, well, it's going up, but it's not buyers, so maybe it's not the type of uptrend I want. Then you're like, Wayne, well, how could that be possible? Well, you should be a subscriber. You would already know these things. Okay, what do you think? Are we going to get back to the double top? It's just shy of 6,100. If you remember, my target for 2024 was 6,111, and we got just shy of 6,100. I think it was 98. Well, at the rate that we are currently moving, the next 7 days we should get to, best case scenario, we would get to 6077. So 20 points from a perfect double top. Well, okay, so that's pretty close. What is it going to take? 8 days? Okay, but that's the linear projection. Another way of looking at news, what's going on this week? Okay, Canadian inflation coming out in 6 minutes. You should be all set to trade that. And then nothing till tomorrow with reliable, repeatable patterns. Let's see. Scalp, no scalp, 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 scalp. Okay. So if Canadian inflation comes out less than 1.9, there are scalps on almost all of the US dollar pairs. Now, if inflation is hot in Canada, higher than expected, let's see, scalp, 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 scalp. Yeah, this is a good trading opportunity. And if it comes out as expected, yeah, look, there's going to be a scalp here. Now, have you done research? Have you decided the projection of Canadian inflation so that you can be ready, willing, and able? So, for example, you'd be ready to buy a dip or sell a rip. One of the things you could do is use your vol radar. But I guess I have to turn it all off first. Turn those off. Okay, nothing on Forex, save. Okay, and then we go back, CAD. I guess you have to do it that way. All right. And so ahead of time, you would set up your implied vol in looking for the direction you believe is right. So if you believe in Canadian weakness, you've already hit the floor for the day. Okay, again, versus pound, floor for the day. Versus Kiwi, floor for the day. USD Kitty CAD. Oh! Stuck in a tight range. Probably take a pass. Euro CAD, floor of the day. You've already missed it. You're hours late. Too bad for you. And, ooh, CAD yen down. So, yeah, you just about 4 hours ago missed the opportunity to sell it. And CAD Swissy. Yeah, once again, about 4 hours late. You should have known. So 1, 2, 3, 4. That's when volatility increases. Oy vey. Okay, so this is the level of research that you should be doing before even going into the markets. So Jim says probably greater than expected. And you would probably want to see what moves the best. Dollar is probably the greatest risk, I would say. So you might want to get like a general idea. So if it's greater, okay, if it's greater, if inflation's high in Canada, it's probably bad for the Canadian dollar. But you probably don't want to be trading US dollar today because of that, the dollar risk and the inauguration and all that kind of stuff. So you might want to isolate it even further. And you're like, I don't want to trade USD CAD. Okay, and now you're filtering everything. So if it comes out greater, okay, you're thinking something like that. But you should have been able to front run it 2.5 to 3 hours ago. Now you're trading pure vol in the moment. Okay. Okay. But anywho. So forecast to be negative. Euro for the quarter, 1.4. Rolling, rolling, rolling. Jim says forecasted to be higher or whatever. Well, there's the history of the world. And, right? Ooh, 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 ooh. 32, right? 30 seconds.
Rolling, rolling, rolling.
Are you guys excited? Dude, this is good, isn't it? Look, we can see the history of this news event, both in a table form and a chart form. We can see this boo, 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 boo. Here we go. Rolling, rolling, rolling. Rolling, rolling, rolling. Should be out now. If you have it, let me know. 1.8. There you go. 1.8. 1.8. And not above 2.0, but greater than forecast. Yeah. Another way of looking at it, I suppose. Oh, no cat? Oh, because I have Mace. I have to turn them all on now. Shoot. I turned off Forex. Okay, try this now. Market is neutral on it right now anyway, so. Bo, 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 bo. Yeah, what should I do? I need to move that out of the way. All right, so let's go through the charts. There's lots of interesting things to be looking at today. I guess we'll just start here. Okay, the first thing I want to point out is that this is the annual M3. Okay, that's the best selling pivot if you're a bear. So if you're trading the drill baby drill narrative, okay, then your target for the rest of the year now is $58. You're selling at 80, you're targeting 58. So why don't we just say 60? Yeah. Yeah. Now, the important part is we don't know direction. Okay? We don't know direction. That's important. But we know prices that are important. So if you're a bull, you still have the potential for this. Now, a lot of people are going to say, drill, baby, drill. You know, there's a national emergency now, and Trump's going to, open up leases for oil companies in the Gulf of Mexico and up in Alaska. And yeah, well, guess what? That will not produce oil for a very long time. Yeah. Okay. No, sorry, Mahai. All right, so now, if you're like, okay, the market, everybody's thinking drill, baby, drill. Everyone is thinking oil prices down. But here's the thing. If oil prices fall, nobody's going to drill. And we need more refineries. Sure. So the idea is, well, we can reduce some of the environmental protection and reduce some of the other, permitting costs or whatever it is, to build these things. I'm not advocating for it. I'm just saying that could be part of a policy to incentivize companies to build a refinery that get paid off after 50 to 100 years. So, yeah, we got to build that. Trump is also probably going to build a Keystone pipeline. Okay, well, that needs to get done, but that takes 10 years, right? All that kind of stuff. All right, so that doesn't produce oil immediately. But if he also has a pro-growth strategy for the United States, maybe that picks up the global economy. So I don't know. Someone's going to bet against. So if you're going to bet against the annual central pivot point and the daily 21 would be pretty much your best buying opportunity. Now, if you're a bear, this will be a threat to you. If you're a bear, you're thinking that. Well, even better, that's a reversal pattern. But if you're a bear, you have this, which has already happened. And now if you're a bull, you have that. Is that going to work? Nobody knows. But if you don't know if you're bullish or bearish, then, well, that's your demise. Okay. Cool. So anyways, I'm just trying to show you oil popped and dropped and is quite logical. And down here, we're coming up around $75 for a potential bid. It's not out of control. It's not crazy. XAU, XAME. Gold popped, dropped, caught our moving averages on a roll reversal, and it's long and gone. Doesn't get any easier than that. Danny says, got short crude oil, exited, too early. Yeah, that can happen, especially with vol. But you should be targeting daily pivots and all that kind of stuff. So anyways, look, this has happened. Do you see it? Just a very basic roll reversal, simple price action, simple moving average action. Okay, this is market support. This is price support. Okay. And will it make a higher high? Well, nobody knows, but you would be quite foolish to be buying it this late. Oh, the moving averages don't matter, but it's the 21 and 55 and everything between them. Okay, 21, 25, 30, 35, 40, 45, 50, 55. That's it. We call them Lucas bands because Lucas asked one day, does it have to be precisely on the 21 or precisely on the 55? I'm like, no. It's a range. Okay? But, you don't need any of this stuff. It's just price action. You don't need any moving average here. Right? Or, okay. It's just price action. And so, cool. Now, I covered this in the fundamental analytics meeting that we did this morning of why this is likely happening. We also checked institutional flows into the asset. We know the institutional positioning. We know multiple reasons fundamentally. So, yeah. So none of this should be a mystery. How about swing trading bullish? Okay, look, what a mystery. Okay, what a mystery. We had this printed on Friday, that was the buying price. Here's the buying price that was printed Thursday. So on Thursday, the plan was have it come down and buy it. And then, right? So then Friday, we had a higher high. So how do you trade? What's the basics of trading? Let's do it. Let's do the basics. Okay, so we have a higher high in an uptrend. So what are we looking for now? A higher low. Where? Well, we don't know. So we do things like this. Well, this used to be support. Now that's resistance. We call that a roll reversal. We also do things like, well, using pivot points, we look at the open, the low, the high, and the close. Oops, wait, sorry, the close is here. And really, that's just an implied volatility type calculation. So based on that, this would be the buy zone on Monday. All in advance, of course. You're like, Wayne, I don't like any of that stuff. Fine, okay, higher high, higher low. So we know that you want to buy a Fibonacci retracement, okay, somewhere between the 382 and 618. The one in the middle, okay, predicts the one in the middle. So that based on Fibonacci alone, what we teach in the training course is this buying gives you this target. Yeah. All right. But you don't believe in Fibonacci either? How else can we do this? Okay. We zoom in. Delete. Okay. Remember, we're not going to look at these pivot points, although it seems to me that was a decent buy and that was a decent buy. I don't know. What would you think here? But going back to just basic price action here or moving averages, let's say, your higher high predicts the higher low. Where should you buy? And what I was getting at with the moving averages, anywhere between the 21.55. Now, typically what we do is we like to buy on the 21 after a crossover. So you get the cross here. So let's do this in green. So where do you buy? Pull back to the 21. I should say 21.55. Pull back to the 21.55. Pull back to the 21.55. Guess what's likely to happen in the future? You want me to help you predict the future? I'm predicting the future. Oh my God. Look, if things continue higher, okay, we'll probably make a higher high. And if we do make a higher high, let me predict the future. We probably want to use that old support as resistance, and we probably want to buy, let me get this in green here, somewhere around the 21.55 in the future, bro. Only if we're up here at this higher high. So how does that work? Well, let me show you. I'm predicting the future. Done. Dusted. Easy peasy lemon squeezy. Oh my God. But you need to know why. Now, I can prove to you quantitatively why. And then I can subjectively tell you why gold is going up. And I covered all of this an hour ago at traders.com. But this is basic trading. This is just basic trading. Okay? Yeah, that's just basic. And of course, what? We have three courses that cover this kind of stuff. Okay, these green zones are swing trades, by the way. Okay, so if you understand this concept, this is a swing trade. Now, How many people read my book from 2008? Anybody? Somewhere between 30 and 50,000 copies were sold. Yeah, somebody did. All right. Cool. Okay, so it's strategy and tactics, right? All right. Explain me, Lucy. Explain me. Of the moving averages we're using, which two moving averages represent strategy? I'm bringing this up because this is how I've been trading for 20-something years. Nothing's ever changed. What EMAs? Yeah, 21.55. Okay. So let me show you. I'll give you the secret sauce because the knowledge isn't that important. You actually doing it is important. Okay? So your bullish strategy occurred right here. You're a bull. That's it. That's it. There's no decision-making process, if you will. That is bullish. That's it. You cannot sell it under any circumstance. Okay, cool. Now, which two EMAs represent tactics? Five, 8. Okay. Now on the FX Bootcamp YouTube channel, which is youtube.com/FXBootcamp, there's a free training course that goes over this and a lot more. It's 4 separate videos. But what I'm getting at here is based on the book, based on the training course, based on everything, based on my first public speech as a Forex trader. And that was at the first Forex Trading Expo in Las Vegas. So this goes back to the very, very, very beginning. I've been doing this since before Forex even had a conference, before, FX Street, which is turning 25 this year, had just launched. So it must have been about 25 years ago. This is when I started trading, right? Check this out. This X means I can only buy. The tactic part is this is the first buying. Don't look at the moving. Wait. Let's do this. Why do I say don't even look at this? Bias pivots, delete. All right, let me put this back. Okay. This goes back to the very, very beginning. That's a buy signal. That's a take profit. That's a buy signal. Okay, that's a take profit. And this was a buy signal. Up, out. Up, out. Up. I just gave you the secret sauce. So then what's the most important thing in Forex? Yeah, Luis, I believe it says everything except like the email alert upgrades and stuff. But yeah, the performance coaching, yeah. Yeah, there's hours and hours and hours a day. Yeah, discipline. The other one is patience, right? Well, psychology, I think, comes a lot with patience and discipline. Okay. Why am I giving you away the secret sauce on YouTube? How come I don't save this for paid members? How come I don't save this for book buyers? Well, ultimately, I'd like you to succeed. I think the performance coaching is a critical part of your success. I think, a top 25 PGA golfer, top 25, after winning a tournament, you can find them the next day on a putting green with their putting coach. Okay? So I taught my kids a valuable lesson. I was a coach for the Science Olympiad. My son is a 2-time state champion. And my daughter is a 1-time state champion. And they were in different categories and not on the same team. Same team, but different categories, right? So anyways, we used a lot of visualization when I coached so my son did bridge building, and it's very competitive. It was really cool. And so I coached them, and on the t-shirt, it says in bold letters, act like a champion. But the act part, they also had in a lighter color gray, the word practice. The act is inside the practice. Right? Act like a champion, practice like a champion. And one of the things I taught them is you win through the practice. That's how you win. You practice more than anybody else. So even though you just won a golf tournament, going back to the golfer analogy, even though you're one of the best golfers in the world and you just won a tournament, so you just beat the top golfers in the world, the next day you're practicing. And so I taught them, you win through practicing, and you only go to the tournaments to motivate the others to work harder and to pick up your trophy. You want to show and display your skills so that people are motivated to follow and to mimic and improve, right? It gives them an idea of, oh, there can be more. I can dream bigger, but you got to work harder, right? And I take that, and by the way, they're both state champions. I mean, which means they competed against thousands of kids. It's not that easy, right? So you only show up, right? You only show up to motivate others and to pick up the trophy. But the way you win is through practicing. And that's what all of this is. Like, I'm trying to inspire you that the knowledge is there, right? The knowledge is there. You don't have to figure out how to build a better bridge. Now, my daughter, she's state champion for rocket building. Dude, they won by a mile, country mile, dude. Holy smokes. You should have seen when my daughter fired off the rocket, the whole audience kind of stood up, all the parents that have been sitting in their chairs, because it's outdoors, right, for a rocket, of course. They've been sitting in their chairs all day for 10 hours. And all of a sudden they all stand up and everyone's got their, in like a salute type thing, because they're looking up at the sun and it's just up there and it's just like, oh, it's like 10 times better than any rocket you saw all day. So anyways, definitely inspiration. So it's like, look, we just went through this period of crazy volatility. If you got crushed yesterday trading crazy volatility, I want this to be a wake-up call. You're like, okay, you traded the crazy volatility and lost money? Why? Oh, well, the Wall Street Journal said that Trump wasn't going to tariff, so I threw a bunch of money down. All right, that's your failure right there. I want you to look at this and say, oh my God, why don't I just trade that? Do you need that crazy volatility? No, crazy volatility is bad. Crazy volatility is bad. And you don't need crazy volatility if you have logic combined with patience and discipline. This isn't that difficult, is it? Then you focus on this. Focus on this now. Focus on this. Focus on this. This is where you focus. The quick buck that amateurs follow, like the big scalps, the markets are moving, there's a thing on TV, did you see that thing? Oh my God, the markets are going crazy. Why are you sucked into that vortex? I thought you wanted to be a professional. Okay? Which one is actually more difficult? Which one is the riskier? Okay? And remember, an hour ago, I spent a lot of time actually talking about this fundamentally and gave two different reasons. Plus, we track it week over week. We track it in the risk gauge on multiple time frames, daily, weekly, monthly. We track this in seasonality. We track this in institutional positioning and flow. Like, none of this is unplannable, right? None of this is unplannable, is it? Cool. So, if you lost money chasing vol, I'd rather you have today be a wake-up call and say no more. None of that. You're planning the future. You're thinking not just hours in advance, but quarters in advance. This is why I do quarterly outlooks and annual outlooks. Why? This is how you should be thinking. And then once you have a thought, You should be planning using technical and fundamental analysis. And once you got that down, your technicals never become easier, but they become, psychologically easier. Okay? Meaning, higher high, I'm going to buy a dip. Boom. Oh, higher high, I'm going to buy a dip. Boom. Oh, higher high, I'm going to buy a dip. Boom. Let it make a higher high. What are you going to do next? Okay? You know what happens is, this is where you're taught to buy, isn't it? Because it broke. This was like the first and last thing I ever learned by, other people. Has anyone been taught that? Once it's broken and made a higher high, you buy it, right? Once it's broken resistance, you buy it, right? That was one of the first things, if not the first thing, I was told when I decided I want to become a trader. And I very quickly learned that that doesn't work. How many people have struggled where you get things right for a while, but then you break even? How many people struggled with that? Well, I was up 100 pips, but then I got knocked out of break even. That's the first stage of success. But the reason you're not making any money is with a strategy like that, you don't deserve to. What's your alpha? After it's made a higher high, I'm going to buy it. Dude, what are you talking about? So you let everyone else make the decision, and then you get in way late? Okay, guess why you break even? Because that's where you get knocked out at break even. This is where you get knocked out at break even. Okay? Look, it made a higher high, so you bought it here. Yeah, guess what? This is where you got knocked out of break even. You bought it here, you're out. You bought it here, you're out. So what's your alpha? You don't have any alpha. So what do you do then? You anticipate. Okay? If you didn't, and then you're like, Wayne, well, if you're so smart, can you predict this? No. But you know what I did see is the higher high outside of range. Simple trap and break. So when you notice the higher high, what do? You look left. Old resistance becomes support. That's your alpha, bro. Where you normally, and by the way, this literally hit me one day in my earliest of days. I think the first thing that hit me as far as a strategy is I get it right, but I don't make any money. I get it right, but I don't make any money. I get it right, I don't make any money. And so what I decided to do to build a strategy is to say, well, if I keep getting knocked out on the pullback, and I hated the pullback. I hate the pullback. I remember, I think I had an ulcer for a while. This is not a joke. I think I had an ulcer in my early days because I'd be up, but I didn't know pivot points. I didn't know fundamentals. So everything was sort of magical, and it'd go up and I'm making money, and then it would collapse on me. And while it's collapsing, I'd have stomach problems. So then I realized, well, I do know something, because when it does come back, very often it goes in the same direction than I initially anticipated. So I used to teach something at FX Bootcamp in the early days. If it was meant to be, set it free. There's a saying in the English language, something like that. If it was meant to be, set it free. Okay. So I'm like, well, okay. So I just wait. Let it make a higher high. I'm like, so I give this one up. The first move, I give up. The break, I give up. Okay. But because I always know at this point, and remember, I learned the hard way. I didn't learn this in a training course. There was no training course. So I learned the hard way that, well, it seemed to me every trade I made would make money, and then I'd get knocked out of break even, and then it would go up, and then I'd do the same trade. I'd be making money, and then I get knocked out of break even. I'm making money, I get knocked out of break even. So I'm like, whoa. Well, at least I got direction correctly. Okay. So then boom. And then the higher high. So I'm like, okay, cool, but it's going to come back. And when it comes back, I'll buy it. Now, this sounds logical, but I didn't have training courses. I never, technical analysis wasn't even a real thing. I mean, people used it, but most traders and investors would laugh. Like, I had people laugh in my face. Professional institutional investors laugh in my face because of the use of technical analysis. So you're like, well, Wayne, this is all basic. It wasn't basic back then. It was not basic. There were no books on this that I found. So anyways, so I went from this pain threshold to say, well, I definitely want to avoid the pain. And if it was meant to be, I'll let it come back and I'll catch the second chance. Okay? And so I ended up being in the business of doing this. And another important factor, since we did moving averages, is that helped me identify which moving averages seem to be important. Which ones should I use to anticipate the pullback, to anticipate the pullback, to anticipate the pullback? So that's how I discovered, I used 2060 for the first few years. And it wasn't until I learned about Fibonacci that I tried 2155. And that worked just as fine. It didn't work any better. It didn't work any worse. And I thought, well, maybe it has something to do with Fibonacci. Well, I don't believe in Fibonacci at all. So whatever. It works. It's fine. You can use 22. You can use 23. Shoot, you can use 24. See, that stuff doesn't matter. Later on, then you start doing things like, oh, well, isn't that interesting? Okay. I'm buying the price I initially bought. Here's the other big thing, right? I'm buying the same price I initially bought. I just waited for the second chance. And I waited for the second chance. It was the same breakout price, but now it's support. Same breakout price, now it's support. But I'm getting the bottom leg and the top leg of the next move. So then I'm like, okay, the 2155 is working for me, but when do I actually pull the trigger? When do I actually pull the trigger? Because, this stuff is bothersome, isn't it? That kind of stuff. Like, when do I actually do it? When do I actually buy it? And I settled on 5.8. 5.8. 5.8. Okay? So So you have this cross, and then I buy the 5.8s. So you can stack them and pack them, or you can buy, exit, buy, exit, buy, and guess what I found out here? Day trading and swing trading. Day trading and swing trading. And then you start to learn there's patterns in these, and and then it gets, you start to discover more and more onions, like the Asia fade trade, and stuff like that. You're like, ooh, there's a timing to all this. Yeah. And then you have to think about, well, what creates this timing? And then seasonality, all this kind of stuff. So I'm going to burn through a bunch of charts now, and I want you to focus on the simplicity. I'm going to show you how not crazy. I'm not trying to say this is easy, but if you traded yesterday and you felt like the markets were crazy, I'm going to challenge that thought. I'm going to show you some charts, many charts, that will describe through technical analysis that the markets were actually not that crazy. You were crazy. If you're like, oh my God, these markets are crazy. No, what you're doing is crazy. Okay, does this chart look crazy? Did gold move last night? Yeah, it kicked off the 21 EMA. And then what? Did it just roll reversal? Yeah, that's crazy, bro. All right. Let's go hard and fast. And I want you, by the way, to feel crazy if that's how you behaved yesterday. If you were still focusing on getting rich quick, the poison is still in your system. Okay? The poison is still in your system. All right. Bitcoin popped to 110,000. Oh, really? We had it at $109,803.50. Okay? When did we put that number there? January 1st. Okay? And then, I guess we can call that a higher high. Then what? Are you learning how to trade? Roll reversal? 2155? Dude. Okay? Now you can't control the target, but you can control the entry and the risk. Okay? So, look, that happened. Was it really crazy? No. It went up, hit the M4 and stopped. Isn't that what it's supposed to do? Okay? Oil. I think we already covered this, or maybe I did it an hour ago. Oil. This is the annual buying price. This is the annual selling price. Oh, you didn't know that? Maybe that's the problem. Okay, here's the other thing. If you're a bull, this is probably the future for you. And these are the likely prices. Okay, if you're not a bull, if you're a bear, well, we definitely will go back to 69. But guess what? The target's way below us, bro. So you should already have an annual bullish or bearish target for oil. If you don't, you're not doing it right. Let's see how crazy the stock market was. Okay. Higher high. Okay. Hit the pivot point, dropped to the roll reversal, kicked off the 5, and is trying again. That's not crazy. Let's try S&P 500. Or sorry, NASDAQ. Okay. Went up. Hit the annual M3. Okay. And stopped. Came down and did the roll reversal. Okay. It's also now back on top of the 21. So if you're a bull, I don't know if you want to be a bull or not. Technically, this is a bull. There's your cross. I've been marking it with an X, haven't I? There's the cross. Okay. These are the dips to the 21. Then we hit this down thing. This is seasonal, by the way. Seasonal. We predicted that in the we predicted that, well, months and months and months and months and months. Anyway, so is it plausible that we do this now? I don't know. That's your job. That's your job. It's not my job. Okay? That's your job. What do you think about the future? Okay? Here's weekly. NASDAQ became bullish May 7th, 2023. There's an opportunity. There's an opportunity. There's an opportunity. And we just had one on the weekly. Look at the role reversal. I did all this for you. You know you've seen this 3, 4, 5 times. Probably a lot more than that, actually. Right? Hey, look at your weekly chart, right? You have an opportunity there and you have an opportunity there, right? You see it? I'm trying to grab it. See, I'm looking at these wicks. So is it plausible that you made a decision to do this? Oh, but you'd rather chase the vol. Oh, I need to make a lot of money quick. Why? Why do you think that way? Okay? And you know the other part of this is that it took a month to fall. Now, traders.com shows you all the seasonality. We have weekly seasonality and we have monthly seasonality. And it's all there. It's all recorded. It's all organized. You can just pull it up at any time and see that when I teach you that 12-12, somewhere around 12-12, December 12th, there's likely to be a top in the market. Guess what? That's 12-8, that's 12-12. Yeah. Cool. Now, what about the third week false rally? Well, it showed up on time. See, I don't know if I don't know if that's next. I'm not telling you I know the future. I have no idea. So it could definitely be, oops, it's my mouse, sorry. It could definitely do this. Definitely. The thing is, will you recognize it if it happens? Has it happened yet? What are the likely prices? Well, I'd say this annual M3, seeing that that's the best selling point, pivot point there is, or a top somewhere in that zone could be a serious problem for bulls, right? Yeah. Are you ready for that? I'm not telling you trading is easy. I'm telling you if you make a decision, then you're ready, willing, and able to know that even though it fell for a month, it's a buy. It fell for a month, it's a buy. Why? You're a bull. Okay? And you should also know the threats. If this fails like this, we got a serious problem. Is that going to happen? I don't know. Is that likely? Maybe. I don't know. Trump does one thing and then he does another. Okay? But you need to recognize when things change. Is this bearish? No. What happens if Trump announces tax cuts? What happens if Trump says, yeah, we're going to tax Canada by 25%, but we're going to do it 5% and negotiate. And if they don't negotiate, we'll do it 10 and then 15 and we'll do a rolling tariff. Okay. What happens if we start the media the next 2, 3, 4, 5 days start asking Trump about closing the Canadian and Mexican borders, tariffing Canada and Mexico trade? Guess what? If that's the focus the next few days, okay? Especially if you believe in the radical liberal agenda.
Crazy radical liberal lunatics.
Yeah, so the thing is, you need to think. You need to think. We call that alpha. If you have no alpha, you have no profit. How do you get alpha, you say? Oh, well, that's pretty easy. Yeah. You have all the data that we discussed today. Okay? Boom, 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 boom. Boom, 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 boom. Nice, right? Look at this. Just gorgeous. Gorgeous. And of course, don't forget, we do actually have the charts. You can go through them. Make sure you use them. But most of you guys are half decent technicians. The problem is that you have to look at all the charts, and there's just no way you can do it. It's a fool's errand, really. Ooh, nice. Look at that. So this will just automate it so you can get to the trading part faster. Okay. Let's do a few other markets so I can prove to you that if you thought yesterday was crazy, what you discovered is your trading is crazy and you need to change the way you trade. Okay. Up into the central pivot point and it stopped. How about Kiwi dollar? You know what this is? What is the pink zone? Monthly sell zone, bearish selling zone, and we're between the 21.55. So yesterday was freaky. What? Maybe it wasn't that freaky after all. Maybe it wasn't that freaky. Yeah, I don't know. It's for you to decide. USD Kitty CAD, we just had that. Okay, how freaky was yesterday when it came to USD Kitty CAD? Okay. This is the January buy zone. Okay. Now, what we prefer is this. So we didn't quite get that. Okay. But notice the freaky volatility, the crazy volatility. Oh, it dropped to the central pivot point and stopped. Wait, was that actually crazy? That's not crazy. It's not crazy at all. Okay, anything else crazy? Did we do euro dollar? Look at that. You know what we're looking at? Okay, this is the Jan sell. See, bearish selling zone. We discovered this price during the month of December. Yeah. Now, we've already traded it once, and it already worked out perfectly. But who knows? Now what? Well, you need to decide. And again, this is your alpha. Are we going to try again? Or are you going to do a higher low because now you're a bull? I don't know. I don't know. What do you want to do? Let's see if you want to be a bull. Let's try to isolate this. Okay, we are going to do position trading bullish now. Let's see if that'll work. Where is it? Position trading, bullish bias. Okay. And we got to go out daily. All right. Now we got to analyze this. Okay. You see? Support, resistance, and now both pivot support, maybe technical support. Okay? Market and price. Now you're like, but Wayne, it's bearish. You just told me 21.55. So, but you're thinking forward, right? You're thinking ahead. Isn't that your alpha? You're thinking something just changed. Maybe it's fiscal policy. Maybe it's monetary policy. Maybe it's geopolitical risk. Things change, bro. Survival of the most adaptable, not the biggest fittest. Hey, you know, hedge funds with billions of dollars have blown up and gone out of business. So you can be big, but it doesn't mean you're survival. It's the most adaptable. So when do you decide to go the other way? Well, that's your alpha. How do you do that? Well, you probably want to look at smaller time frames. Okay, good. So if you wanted to be a bull now, how would you do it? Okay. And you're like, but Wayne, I'm zoomed in here. We're below this week's pivot points. Yeah, but do you remember me on the higher time frame? What is this? Next week's central pivot. I'm already on next week. Okay? Is that what you want to do? I don't know what you want to do. But I'm teaching you how to do what you want to do. Don't listen to me. Don't listen to YouTubers. Don't listen to people on CNBC and Bloomberg. Do not listen to the Wall Street Journal. They told you Trump wasn't going to raise tariffs. And then 2 hours later, he's like, yeah, I'm going to raise tariffs by February 1st. Oh, I guess that was nonsense. Too bad if you lost money. The journalist, the 20-year-old journalist from a liberal arts school made a financial decision on your behalf. Really? Okay. So I'm teaching you to be the boss. Look at my cup. Like a boss. Do you act like a boss? You got to think like a boss and then act like a boss. Okay? The rest is risk management. Okay? Remember, people listen to your opinion, not the other way around. Help me, Jim Cramer! Anyways. Yeah, Lucas, that's right. Wayne is not saying one way or the other. I don't know the future. I don't know. But I do make decisions. And that's where my alpha lies. Title says there's no... So Dave, yesterday, we put a new administration in the White House who is changing domestic policy, foreign policy, immigration policy, healthcare policy, and government spending. That's all fundamental, my friend. Okay? That is fundamental. Has there been a change in past fundamentals due to this potential change or let's say actual fundamental change? Have we tariffed Canada yet? No. But it's definitely on the table, and the probability of it is quite high. That is a fundamental change. Now, the economics, which is what you might be talking about, title. The economics of the past have not changed. Inflation is in Canada is inflation in Canada. GDP in Canada is GDP in Canada. Okay? Retail sales in Canada hasn't changed. But we need to look at this data, interpret it, and try to have a base case, worst case, best case scenario for the future. We're all about the future. We're not about looking at the past, but you have to have the past data and then make decisions, because the past data doesn't predict future results. So you have to say, well, what trajectory is the government and the central bank and the monetary policy and global trade? Like, what is happening? What has been happening? And then you say, okay, well, then monetary policy and fiscal policy dictate whether that changes or not. And what's just happened is a massive, radical, fundamental change in what is likely to be fiscal policy, global trade, government spending. Okay, the G in GDP. Excuse me. And this can radically change what the central bank is going to do. It'll radically change how our trading partners deal with us. It could change. And remember, if money doesn't flow across a border, the value of the currency doesn't change. Okay? So you need to look. Take the past data and understand it and look at the trend and the change and stuff. And then try to anticipate, based what you know about monetary policy and fiscal policy of every economy in the world, what is the future likely to be 7 days, 7 months in advance. And then be prepared and use technical analysis to confirm or deny that. Okay, title? Your process, your bias, and the rationale of your bias is your alpha, and your ability to execute the trades will dictate whether that alpha turns into profit. Okay? So, title says, has monetary policy changed? Yes. Monetary policy. The Fed has raised interest rates by 50 basis points. You're like, no, Wayne, they cut. No. They removed future cuts from their summary of economic projections, which then raises the projected neutral rate up 50 basis points, which is 2 rate hikes. Yes, that is definitely happening. And we see it in the markets. Okay? So thank you, title. I appreciate that. Those are good. Good thoughts, good concerns, good questions, Dave. Yeah. Yep. So pay attention to fiscal and monetary policy of every economy in the world, and then do comparative analysis of them so you can say, the Bank of Japan is going to raise interest rates to 0.4%. Oh. Is that going to happen? Well, yeah, we think so. So I got to go, babe. That was real. Tomorrow I'm traveling. Thursday, I'm in a beautiful penthouse hotel room. The presidential suite. Yep. And I should be home by Monday if it all works out great. But we got some nasty weather coming our way, so who knows? Sometimes this is a can of worms. Friday, I may or may not be able to do FX trade. I'll probably pass on it. It depends. So I'll reach out to them. But just heads up, you're not going to see me for a few days, but everything's okay. And yes, we're likely to get inclement, as some people say, weather. And so, yeah, it's snowing all over the place in America where it's not usually supposed to snow. Meanwhile, I'm going to travel. So anyway, so if I can do the live streams, if I can do the webinars, I will. If not, I got supermodel stuff to do. I got, models got to walk the catwalk, Yeah. Yeah. So, hey, peace on earth. May the pips be with you. May your profits be above average. And I hope you feel and sincerely believe that I'm trying to be a positive impact on you as a trader and that I want you to succeed. Oh, yeah, it's business. Yeah, and I'll end up taking a few days off a month from now, and that'll be personal. Yeah. But this is business. Yeah. Everything's business. All right. So anyways, yeah. So thank you, everybody. Have a wonderful day and have a wonderful trading week. And I hope today's conversation was inspirational.